Welcome back to the channel and thank you for joining me today. Today, I just think I should talk basics about the CPI report that came out today. It wasn't as great as it would have been or that it could have been. Okay, CPI is called Consumer Price Index. And what is that? What is Consumer Price Index? It's a kind of mathematical formula that the government used to kind of gauge to see how inflation is or the extent of inflation. So the prices of goods, either high or low, is when the government find a way to compare the prices of basket of goods and services also. So you go to Kroger, you go to Publix, you go to Walgreens, you go just consumer goods, things that we use on day-to-day basics. So there's a formula, there's a process where the government can buy all those things and bring it together as in a basket and kind of know average out what the prices are compared to previous month or compared to previous year. So that is what they call CPI, the consumer price index in this basket. So it's very important to us. It's very important to the market. It's important for the government to have that data to be able to know the stage and the strength of the economy. So today report the CPI as great. It could be better because it actually went up from last month compared to last month. It went up, and why? We all understand that lately the prices of good of energy, the price that we pay at the pump for gas, it has gone up. It continues to go up. So as it continues to go up, people are getting less and less disposable income. So the money that they could have used for other things, they have to spend it on gas. And this the price of gas also reflect on the price of product in the store, because if you see it get there, a truck brought it there, and truck uses gas. It doesn't use water. They use gas to fuel to power the vehicle. So when energy price goes up, it kind of reflect on everything else. And that is why the CPI went up this time around. And it's kind of it's not really conducive position for the market, because everybody trying to control, we are hoping and we're trying to control this inflation. So if you control the inflation, the stock market will, the companies will make more money, people will have disposable income, they go out and spend money. So the CPI is a mathematical formula, a process where the government try to get the strength of the economy based on the consumer goods and services. So the cost of of paying a plumber, of fixing electric socket, or whatever services that we have, it always trickle down to that line. So that's why the CPI today is very important. But it seems like the market have already kind of expected it and has already priced that thing, has already priced that the increment into the market. So it's kind of it seemed like the market was kind of flat. We can say it's kind of flat. It wasn't bad as it could have been. So the CPI is what caused the market today to kind of go flat a little bit. And I just think I should bring it us to us for us to kind of, when as long as we continue to build this financial wealth, there are variable factors. There are things that we don't control that actually determine the greatness of our portfolio and the time taking of our portfolio. And one of these, which is very big factor, is inflation. If inflation is high, then there's possibility of recession. There's a possibility that people will not have disposable income to go out and do all those things that they plan to do, or that they would love to do. So inflation is one of it. And as I want us to have it in the back of our mind as we try to build this financial wealth, as we're trying to create our portfolio, as we try to to set the foundation for our generational wealth. That there are some things that affect that. that affect the economy. Whatever affect the economy also will affect our portfolio. So CPI, inflation, is part of it. It affects our portfolio, and the CPI today reflects that. So that is why I just said I should kind of bring it out, for first of all, for us to be able to understand what CPI is, and also for us to see how it affects our portfolio, how it affect our plan financially. So the energy price that keeps going up, which we don't basically have the whole control, we don't have control over it, is most oil are produced, overseas, and they determine their prices sort of somehow, and we don't fully have the full control of the prices of the income. If you look at this, what the report today, this is what the report shows. Let me show the report for the consumer index, price index. This is the summary of it, and this is from U.S. Bureau of Labor Statistics, and this is the actual report here. Well, I just if we really want to kind of look into it, we can go ahead and just Google it and read it into details. But all I just want to bring out for us to see is how the increment from compared to July. If you look at it right here, as highlighted, the all-time index increased 3.7% for the 12 months ending August, a large increase than the 3.2% increase for the 12 month ending July. So it went up from 3.2% to 3.7%, and that is the increase. And the all-time less food and energy index post 4.3% over the last 12 months. The energy index decreased 3.6% for the 12 months ending August, and the food index increased 4.3% over the last year. So that is the increment from July while compared to August. This is the August report, and if you compare it to July, it actually went up by 3.77%. And like I've said, like it's a mathematical way formula, a process that is being used. If you look at it right here, it's a food. This is the breakdown of it. All items. So it's a food, February 2023, zero point 0.4, March 0.0, 0.0, 0.2 in May, June uh, zero point 0.1, July zero point 0.2, and August zero point 0.2. But the adjusted is 4.3, and which is now 3.7 right now. So these are the breakdown. If you look at the breakdown, like I said, is things that we use day to day, consumer goods, including also the services. This is gasoline, commodity, energy commodity, food away from home, electricity, utility, new vehicles, and apparel, shelter, transportation service, medical care service. All those items that we use on daily basis. Medical care services. All right. And so this is just the report. I just say I should kind of just bring it out just for us to see, just to have idea of how it goes. And look at this; it's broken down. It's the energy index rose 5.6% in August after increasing 0.1% in July. The gasoline index increased 10.6% in August. And that is the issue. That is the challenge right there. Because energy, it makes every other goods kind of go high. It trickles down to everything else, from every consumer goods that we use. May it be the medicine, may it be beverages, may it be food in the store, grocery store, grocery, all those items that we use on daily basis. The energy makes it even more higher, and that is why I just say I should just bring it out, that the consumer the CPI is very essential when it comes to finding out what the strength of the economy and inflation in the country. So this is the report right here. The energy is what actually make it up. It's what make it go up. And that is it. If you are interested, even knowing going into details of this, you can just Google it, U.S. Bureau of Labor Statistics. Now you can get more information and more details of the report on it. So that was just what affected the market today, and that's why the market seems to be kind of flat. It wasn't bad as it could have been, and so I'm just saying for us to pay attention to little things that is not within our power to control. That also it affect our portfolio, it affect our finances directly or indirectly. So I know one thing though. I know with times, as time goes on, everything will start getting better and it start falling in places. I mean, it always do. No condition, no season that is permanent. So it's always changes. So now it seems like it's kind of rough now, but I know with time it's going to get better. And that is why I believe this is the time for us to start accumulating. It's time for us to start buying all these cheap stocks, to start getting into it, to start piling it up, so that when everything start working, we will rise up with it. We will all go up with it. This is the time for us to do that. Thank you for joining in today. If this is your first time on this channel and you have not subscribed, I'm pleading with you to support this channel, to encourage me to continue to bring more and more content that will help us to share the value, to share the information within ourselves. Subscribe to this channel, share this video, and let me read your comment. Let me see what area you might even want me to touch more into, or you might express your own opinion, and let me also learn from you. Thank you very much for taking time out today, and I will see you in the next video. Have a wonderful day.